The S&P 500 continues grinding higher, up 0.3%, closing at 6849.72. We've been talking about this consolidation zone over the last three trading sessions between 6800 and 6850. And if we just zoom in here to our chart, it looks like we have started breaking out of that zone, although we did get a little bit of a rejection here just in the last 15 to 30 minutes of the trading session, back down to the 6850 level. In fact, if you take a look at our upper dealer cluster zone highlighted in red, which basically extends from 6850 up to 6950. This is an area based on the current gamma exposure structure where dealers are likely to increase their selling pressure as price moves higher. So we did see a little bit of that today. However, in our opinion, dealers will be mostly concentrated at this 7,000 strike. That is where the bulk of the gamma exposure is and has been over the last several weeks. And we think it's just a matter of time before price does break out well above the 6850 level and heads higher up into that 7,000 range. Despite the narrow range trading we've seen over the last few days, there are still plenty of opportunities to make money. Just today at 10:17 a.m., we actually sold 10 SPX iron condors for $2, targeting price to stay between the 6800 and 6855 zone. If you look at our post from the time we entered this trade, most of the gamma exposure was concentrated between 6800 and 6850 on a zero DTE basis. So we've got our zero DTE GEX filter here, and that's actually exactly what we saw play out today. Switching over now to our time machine feature, you can actually see this just a little bit clearer. We've got this started at 10:15 a.m., which is a couple of minutes right before we took the trade. You can see the zero DTE GEX mostly concentrated between that 6800 and 6850 level that I mentioned. And we actually sold the 6855, 6860 call credit spread side of the iron condor with the 6800, 6795 put credit spread of the iron condor on the downside. And so as trading progressed, there was a slight positive bias in the overall trend for the day, but the gamma exposure at that 6850 strike really stood out firm, and so we were well within our profit range by the end of the day. We actually closed out this trade as price curled down into that large GEX at the 6850 level right at the close. So we were actually able to lock in a really nice profit on the day, closing those iron condors out for $1.15. So selling those for $2, closing it out for $1.15, $850 profit. And this is the beauty of using zero DTE gamma exposure combined with appropriate option strategies, gives you high probability trade setups. By the way, if you're interested in tracking our trades in real time as we manage our options portfolio, you can become a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by checking out our community Discord, absolutely free. Links in the description below.
Nice trade, Anthony. Let's take a look at IWM. IWM was pretty strong right out of the gate today after being weaker than other indices yesterday. And we actually see IWM almost tagging this big 250 positive GEX cluster. And really at 249.84, that's close enough that I would consider that area tagged. It remains to be seen in coming days if we'll push deeper into this red box, basically where we would expect dealers to potentially become sellers. We do have meaningful GEX at 255 and at 260. So while the chart looks somewhat neutral, I would say the recent price action does lean bullish. As long as we stay above this whole moving average, that gives us a technical line of support to watch. We still don't see a lot of volume above 250. Most of the volume today was below 250, down to the 235 strike. So we'll see tomorrow if we see follow through above 250, or if we reject below 250 and possibly retest 245 or 240. It's such a large GEX cluster. It does signal relative importance. So we're kind of right at the doorstep of a very important level.
Thanks, Sean. Let's take another look at Meta. We discussed Meta a couple of weeks ago here on our YouTube video, and I just want to take another look as it has bounced from below 600, now trading at 639.60 as of the close of today. We had previously seen quite a bit of negative GEX. That has somewhat diminished over the last couple of weeks, and we're starting to see positive GEX more prominently at the 650 and the 700 strike. Now, Meta continues to trade below the 50-day EMA, which is this red line on our chart, and it continues to significantly lag some of the other Mag 7 leaders like Apple, Amazon, and Nvidia. So this is a name we have stayed away from for a mean reversion play, even though it did see a couple of days of a pretty nice bounce. It's kind of topping off here over the last few trading sessions. However, I do think this setup actually looks pretty good into the end of the year for a premium collection type of strategy, maybe an iron condor sandwiching these larger gamma exposure concentrations somewhere between the $600 and $700 range. One of the factors going in Meta's favor to the upside is actually options volume. We've seen over the last few days options volume between 650 and 700 coming in pretty strong, and that is well above where we're trading right now, just below 640. And so in the options market, at least, it does look like market participants are expecting somewhat higher prices, potentially in the 5 to 7% range. Again, this would also support the idea for doing a premium collection type of strategy, as price might slowly grind higher over the next couple of weeks. This would allow you to collect some premium as price trades within a broader range. So this is a name that we're considering adding to our portfolios as a premium collection type strategy.
All right, let's switch over to the VIX. Red apparently is the VIX's favorite color, painting red candles ever since that late November spike in the VIX. Yet we haven't made a new low in the VIX for several days. I did want to note that 16 is still the largest negative GEX cluster. The VIX's GEX picture is currently not indicating very high likelihood of dropping below the 15 strike. So even if we see the VIX continue lower, which is very possible, I do think right now the odds are tilted toward that downside and volatility being limited. What's becoming more likely, in my view, given the one-sided nature of this crush in the VIX, is that we may see some sort of an interim rebound. Even if we see a bullish follow-through to the end of the year, we could definitely see the VIX come back up and test the 18 to 20 strike. The 2-hour time frame is showing a solid downtrend for the VIX with no immediate sign of relief. The Keltner channels are pointing downward. And really, if you look at prior times where this happened, we really didn't see the VIX show any signs of life until we saw a close above the whole moving average, and then we saw several closes above as the momentum turned for volatility. So you can see right now there's really no sign of a turn here.
All right, next let's take a look at Shopify. Shopify up 2.02% today, closing right at 160. Shopify's been struggling really over the last several months, kind of consolidating in a wider range, mostly between 140 and around the 170 level. However, if we zoom into the more recent trading action over the last several trading sessions, we can see we're actually closing above the 50-day EMA. It's really been struggling right around this 50-day EMA over the last month or so, but closing above that level today. And we're also coming right up to a near-term support right at the 160 level as well. So I'd like to see a couple of days of trading above that level. We're starting to see the gamma exposure shift to the upside. If you look at the volume today, volume in the options market is a little lighter than a lot of the names that we usually look at, but nevertheless, most of the volume is concentrated between the 160 and 170 strikes. And that, combined with trading above the 50-day EMA and breaking out of this near-term resistance level here at 160, could all signal further upside to come. So this is a name that's going to be going to the top of our watch list for a potential addition into our portfolio.
Thanks, Anthony. Our regular viewers know that we cover GLD fairly regularly, and we have a strategy designed to generate income using GLD. But today I wanted to look at GDX. So let's look at the gold miners as opposed to gold itself. I think both look interesting here given the recent pullback, and we see a positive GEX on GDX. I'm sure some technicians may call this a double top or potential double top, but I'm strictly looking at the tactical picture in the short term and looking at the current GEX picture in conjunction with that. And, you know, the Keltner channels are still pointing to a potential uptrend. And really, this move down looks more like a flag consolidation to me. We're kind of right at this area where the whole moving average is, and we're just above this key GEX area at the 80 strike. This GEX at 85, which also matches with the upper Keltner channel, it saw outsized volume today relative to other strikes. So looking like there's a pretty good shot to see GDX move up toward this 85 strike. in coming weeks.
And guys, even though Black Friday and Cyber Monday are both over, our Cyber Monday sale is still going on. We've extended it for a few more days. For a limited time, you can get an additional $400 off our yearly Portfolio Manager tier subscription. Use code CyberMonday25 at checkout. Obviously, this promotion is going to be ending very soon, so definitely take advantage of it while you can. Members get full access to our Gamma Exposure dashboard, our option flow analytics, as well as our algorithmic trading tools. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.